There's a specific kind of silence that hits a few seconds after a large payment leaves your bank account. Not panic, not regret exactly, just a quiet awareness. You open the app, you see the number drop, and even if you make good money, even if the payment is manageable, something about it feels heavier than it should. I remember noticing that feeling the first time. I had a car payment that looked reasonable on paper. The income was solid. The job was stable. The approval process had been smooth. The monthly number fit neatly into the percentage guidelines people like to quote. And still, when that payment hit each month, it felt like more than just a bill. It felt like a narrowing. Car payments are so normal that we rarely question them. They're almost a rite of passage. Graduate, get a job. Upgrade the car. Trade reliability for a newer model. Trade that one for something safer, something nicer, something that matches your income. It feels like progress, and in many ways it is. But there's a difference between something being common and something being neutral. Most people don't feel financially stuck because they're irresponsible. They feel stuck because they're fixed. Commitments quietly expand to match their income. And car payments are often one of the earliest and most persistent examples of that expansion. What makes it tricky is that the payment usually doesn't look dramatic. It's not catastrophic. It doesn't blow up your budget. It just settles in. $500, $600, sometimes more. If you're earning well, that might seem small relative to your take-home pay. But money isn't only about ratios. It's about flexibility. When you run your monthly numbers, a car payment behaves like any other fixed expense. It sits there alongside rent or a mortgage, insurance, utilities. It becomes part of the structure of your life. And structures, once built, influence everything else around them. You don't notice it at first. You just adapt. Maybe you save a little less aggressively. Maybe you feel slightly more attached to your current job. Maybe you hesitate before taking unpaid time off. None of it feels dramatic enough to point to one specific cause. But over time the pattern forms. You start earning more, but your lifestyle solidifies around those fixed costs. The car becomes part of your identity, part of your daily rhythm. And replacing it feels automatic when the loan term ends. The idea of not having a payment almost feels unrealistic, even though it used to be normal. That's where the subtle trap lives. It's not that the car is unaffordable. It's that the payment reshapes how you experience your income. Instead of income creating options, it starts maintaining commitments. And when most of your raises go toward upgrading fixed expenses, rather than increasing flexibility, something shifts. You're working hard. You're making good money. But the sense of forward movement feels slower than it should. You look around and wonder why the gap between earning well and feeling free still exists. Part of the answer is psychological. A car payment doesn't just remove money from your account. It removes a degree of choice from your future self. It assumes you'll keep earning at least what you're earning now. It assumes stability. It assumes consistency. And when you stack multiple assumptions like that, car payment, upgraded apartment, subscriptions, lifestyle creep, you create a life that works beautifully. As long as nothing changes, most people don't consciously decide to trade flexibility for comfort. It happens gradually. A dealership offers a low monthly number. The financing feels routine. Everyone else seems to be doing the same thing. You don't feel reckless. You feel normal. But normal doesn't always mean optimal. The deeper issue isn't about cars at all. It's about how fixed obligations accumulate and slowly convert income into maintenance. You stop asking, what could this money build? And start asking, what does this money need to cover? That shift is subtle, almost invisible, yet it changes how work feels. It changes how risk feels. It changes how long you can tolerate something you don't love. If you've ever had the thought, I make good money, so why do I still feel financially tight? There's a chance the answer isn't in your income. It's in the structure around it. And car payments are often one of the clearest examples of that structure at work. Not because they're evil, not because they're always a mistake, but because they're so easy to justify. The real question isn't whether you can afford the monthly number. It's what that number quietly costs you in terms of freedom, optionality, and mental space. Once you start looking at it through that lens, the conversation changes. And that's where we need to go next. Most people think the car payment is a spending decision. It's usually framed that way, a choice between models, between used and new, between reliable and comfortable. But it's less like choosing a product and more like installing a weight, not a crushing weight, not something that knocks you over, just something that sits on your shoulders quietly and becomes part of how you stand. Imagine carrying a backpack every day. At first you barely notice it. The straps fit, the load feels balanced. You can still walk, still move, still go about your life. Over time your posture adjusts to it. Your muscles adapt, it becomes normal. Then one day you take it off, and you realize how much lighter you feel. Car payments work like that. The monthly number integrates into your life so smoothly that you stop seeing it as optional. It becomes structural. And once something becomes structural, your behavior reorganizes around it. Psychologically, fixed payments change how we interpret risk. When your baseline expenses are low, uncertainty feels tolerable. A job change feels interesting. A slower month feels manageable. Taking a break feels possible. But when you layer in a few large fixed obligations, your nervous system registers something different. Not panic, just reduced margin. And margin is what gives you room to think clearly. Here's the part most people misunderstand. The payment itself isn't what traps you. It's the predictability it demands from you. A car loan assumes consistent income. It assumes you'll keep showing up to work at roughly the same pace. It assumes your tolerance for disruption stays low because disruption becomes expensive. So even if you're earning well, the commitment subtly shifts your internal calculations. You might pass on an opportunity that pays less upfront, but has more upside. You might delay starting something on the side, because your fixed costs feel too anchored. You might stay longer in environments that drain you because stability now carries more weight than exploration. None of that shows up in a budget spreadsheet. On paper, everything still works. But the human experience of money isn't just math. It's perception. It's how safe or constrained you feel making decisions. There's also something else at play. Lifestyle anchoring. When you upgrade a car, especially with financing, you're not just upgrading transportation. You're upgrading your baseline. The comfort, the features, the quiet cabin, the reliability. They reset what feels normal. Going backward starts to feel like loss, even if that loss would actually increase your financial flexibility. Behavioral economics calls this loss aversion. We feel the pain of giving something up more strongly than the pleasure of gaining something equivalent. So once the nicer car becomes standard, the idea of driving something simpler feels like regression, not strategy. That emotional framing keeps the cycle alive. Then there's the monthly framing itself. Dealerships don't lead with total cost. They lead with the payment, because monthly framing compresses the decision. It turns a large, multi-year financial commitment into something that feels bite-sized and manageable. $600 a month sounds digestible. $36,000 over 5 years feels different. When you evaluate based on the monthly number alone, you're focusing on affordability in isolation. You're not asking what else that money could have done over the same period. You're not comparing it to optionality, to investments, to reduced stress. You're just checking whether it fits. And if you make good money, it usually does. That's why high earners are not immune to this. In some ways, they're more vulnerable. Because the higher the income, the easier it is to justify a higher fixed payment. The percentages still look healthy. The debt-to-income ratio still falls within acceptable ranges. But the structure tightens anyway. It's like building a house on a solid foundation but gradually narrowing the hallways. You can still move through it. You can still function. But your range of motion decreases with each renovation. A car payment isn't the only hallway that narrows, but it's often one of the first. And because cars are visible, because they signal success, stability, adulthood, we rarely question whether the signal is worth the constraint. The realization, when it happens, is usually quiet. It's not, "I can't afford this." It's, "Why does this feel heavier than it should?" That question opens something important. Because once you stop viewing the car payment as just transportation and start seeing it as a long-term claim on your future income, the conversation shifts from affordability to alignment. Not whether you can carry it, but whether you want to shape your life around carrying it. I didn't understand any of this the first time I financed a car. At the time it felt measured, responsible even. I wasn't stretching for something outrageous. The payment fit comfortably within my income. The rate was reasonable. The term was standard. On paper it looked clean. I remember sitting in the driver's seat the first week I had it. The interior still smelled new. The dashboard felt precise. There was a quiet satisfaction in knowing I didn't have to worry about reliability for a long time. It felt like progress, and for a while nothing seemed different. The payment drafted automatically each month. I barely noticed it leaving my account. If anything, it made me feel organized, structured. But a few months in, something subtle started happening. I began thinking about my job differently. Not in a dramatic way. I wasn't afraid of losing it. I was performing well. The income was steady. But I noticed that when small frustrations came up, a project I didn't care about, a direction I didn't agree with, my tolerance shifted. Before, I would have entertained the idea of exploring something new, maybe a different company, maybe reducing hours, maybe trying a side path that wasn't guaranteed. Now the thought process felt tighter. It wasn't, what would be interesting? It was, would that feel stable enough? The payment had quietly inserted itself into my decision-making. I also noticed how it shaped smaller choices. When friends talked about taking extended time off between jobs, it felt abstract to me. When someone mentioned starting something uncertain, my first internal calculation wasn't about the upside. It was about continuity. Would the income stay predictable? I didn't say any of this out loud. From the outside, everything looked fine. I was earning well, saving, investing, hitting the milestones people point to. But internally, my flexibility had narrowed. The car wasn't financially overwhelming. That wasn't the issue. The issue was that it had converted part of my future into an obligation that required consistency. And consistency sounds harmless until you realize how much of your identity it starts to anchor. There was one moment that clarified it for me. I was reviewing my monthly expenses, just casually. Nothing alarming. But when I mentally removed the car payment from the list, just as a thought experiment, I felt something shift. The number of months I could live without income increased noticeably. The pressure in that hypothetical scenario dropped. The range of choices expanded. It wasn't about the car itself anymore. It was about how much mental room that fixed cost was occupying. I started asking myself a question I hadn't considered before. If this payment disappeared tomorrow, what would I feel free to consider? The answers were small at first. Maybe working less for a while. Maybe being more selective with projects. Maybe tolerating volatility in pursuit of something more aligned. None of those were dramatic life overhauls. They were just subtle expansions. And that's when it clicked that the payment wasn't trapping me through force. It was shaping me through constraint. I was becoming slightly more cautious than I naturally am. Slightly more protective of income stability. Slightly more resistant to experiments. The car hadn't changed my bank balance in a catastrophic way. It had changed my posture. That was harder to see, and harder to admit. Because financially, I was fine, but mentally, I was heavier than I needed to be. Once I saw that shift in myself, I stopped thinking about the car payment as a budgeting problem. It became a clarity problem. Nothing about my income had changed. Nothing about the interest rate had suddenly become predatory. The numbers were the same. What changed was how aware I became of the trade I was making. And that awareness did something subtle. It slowed me down. Instead of asking, "Can I afford this?" I started asking, "What does this require from me?" Those are different questions. One is about math. The other is about posture. When I began looking at fixed expenses through that lens, something interesting happened. The goal stopped being optimization. I wasn't trying to squeeze the best possible deal out of a payment. I was trying to understand how much of my future attention it would claim. There's a kind of mental quiet that comes from knowing your baseline is low. Not minimal for the sake of aesthetics. Not extreme. Just low enough that your income doesn't feel pre-allocated before it even arrives. I hadn't realized how valuable that quiet was until I experienced a version of it. On months when my expenses were lighter, I noticed I was more patient, more open, less reactive to small disruptions. A surprise cost didn't feel like a threat. It felt like an inconvenience. That difference matters, because financial stress rarely announces itself loudly when you make good money. It shows up as background tension, as a slight urgency in decisions, as a reluctance to step away from what's stable, even temporarily. What began helping wasn't earning more. I had already increased my income over time, and the feeling of constraint didn't disappear in proportion. If anything, it just scaled with the commitments I allowed myself to take on. What helped was understanding the value of optionality, not in a dramatic quit-your-job way, just in the sense that I could make decisions without immediately running them through the filter of, will this disrupt my payment structure? There's a steadiness that comes from knowing your lifestyle doesn't demand your maximum output, and the absence of that steadiness is easy to normalize, especially when everyone around you is financing something. Cars, upgrades, conveniences, all manageable, all justified. But each one narrows the gap between what you earn and what you must earn. The shift for me wasn't about swearing off debt or adopting a rigid philosophy. It was recognizing that every recurring obligation subtly trains you to prioritize continuity over curiosity. Once I saw that pattern, I cared less about appearances and more about flexibility. Not because flexibility is glamorous, but because it feels lighter to carry. And I think that's the part we don't talk about enough. Car payments don't usually ruin people's finances. They don't create headlines. They don't feel reckless. Most of the time, they sit quietly inside an otherwise responsible life. You go to work. You earn well. You make the payment. The system functions. But functioning isn't the same as moving forward. When a fixed obligation absorbs a steady portion of your income, it doesn't just affect your bank account. It influences your choices in ways that are hard to trace back to a single source. You hesitate a little longer before taking a pay cut for a better opportunity. You think twice about stepping away from something stable. You tolerate situations that drain you because the baseline number needs to be met every month. None of that feels dramatic. It just feels practical. And over time, practicality can quietly turn into confinement. The deeper issue isn't that a car payment is immoral, or that financing a vehicle is automatically a mistake. It's that recurring commitments shape identity. They shape how much risk you're willing to hold. They shape how much uncertainty you can tolerate. They shape how free you feel to experiment with your own life. If your income is strong, the constraint might not show up as scarcity. It might show up as caution, a subtle narrowing. You start optimizing for consistency instead of growth, for predictability instead of possibility. Not because you lack ambition, but because your fixed structure rewards stability above all else. And when enough of your income is spoken for before it arrives, even good money starts to feel smaller than it is. That's why this conversation isn't really about cars. It's about the difference between earning well and keeping room. Room to pivot. Room to pause. Room to decide who you want to become next without immediately calculating the cost of your existing commitments. Being financially stuck doesn't always look like debt collectors or missed payments. Sometimes it looks like competence without expansion, like a life that runs smoothly, but never quite accelerates in the direction you hoped. If you've felt that tension, even while doing everything right, it doesn't mean you're failing. It might just mean your structure is heavier than it needs to be. And noticing that is not a criticism of your past decisions. It's awareness. Sometimes the most powerful shift isn't earning more or cutting everything back. It's simply recognizing which obligations are shaping you and deciding quietly how much shaping you're willing to accept. That kind of clarity doesn't feel dramatic. It feels steady. And steady is often where real progress begins.